You moved.
That was a good one because how you going like this. I was like, I'm going to beat him. And then I lost.
Mortgage Geek is in the house. What's up, my man?
What up?
Good to see you, brother.
Good to see you.
All right.
Love being here.
Yes, it's great to have you. People love these segments because they get to become smarter than everyone else. That's the whole point here. So serious knowledge in the real estate market here in San Diego and really globally because you run a bank, Cornerstone Mortgage Group.
Correct.
You're the president. You know what's going on the back end, what people are doing. Investors are offering these things, that thing. There's all kinds of products now. I'll talk about several of those things. Rates have gone up. The market has maybe changed a little, would you say, as a result of that?
Yeah, I mean, definitely. People are, people that just kind of don't watch what's happening in the market are coming and we're giving a quote, you know, after they've been pre-approved for like 3 or 4 months, and all of a sudden they're like, the interest rate's 0.5% higher. I want this rate. And I'm like, hey, folks, like, it's gone.
Yeah.
It's not coming back.
May not come back, huh?
No.
Economy's too strong.
Yeah. Refinances, you know, it's so weird. It's like refinances across the board are down, right? The last like couple months I've been doing more refinances than I had the last like 9 months, but they're all like different refinances. Now it's like, hey, I'm going to take the cash out of my free and clear property. Yeah, it's still a really good time, but your rate's 5.5, and they're fine. And then, I mean, the Fannie Mae has made probably some of the most epic changes on the planet, like for condos.
Talk about that. Tell us about that. What's going on?
Like, limited review for investment. There's no more requirement for like 50% owner occupied, up to 75% for investment.
They changed that?
Yeah.
That's
I'm doing it now
That's crazy.
because I service, so we're just not delivering them until the actual guideline change. So folks like get a jump start because the rates are still down. And I mean, I just reached out to a client. I'm like, hey, I think it's a really good idea that you refinance. And he has 10 free and clear properties in a condo. And moving forward with it.
So you're able to do the deal now because you service the mortgages.
Yeah, just don't deliver it. I just hold them off my delivery.
But a lot of people who sell to Fannie Mae are going to have to wait until the guidelines change. Or they will choose to.
They will choose to. Yeah, most people actually choose to, and I think that just comes from like, hey, if I was running the bank but I was not a producer, I'd be like, no, just wait until that time. I truly would. But being a producer, I'm like, well, why? I just hold it until I delivery? Well, let's get going on it now. So then the whole bank benefits from it. So it's pretty cool.
When is the actual guideline change?
I don't want to tell that on.
You don't want to tell anyone?
No, because I want some mystery out there.
Okay, gotcha.
Yeah.
You know
I don't want every lender that's watching the show to be like, what?
You know what? Good point. It doesn't matter because you can get it done with Cornerstone Mortgage right now. So
Sorry, folks.
It changed right now,
Yeah.
as far as you're concerned.
Yeah, exactly.
And so that's huge. So some of those things are like compensating potentially what a normal tick up in interest rates might do to sort of suppress maybe activity in the marketplace. Would you say that?
Yeah, correct. I think they're actually making some incredible decisions regarding condos. Because like if you ever look at it, condos have been beat up, right? It's like self-employed, like beat up, like, you know, you can't do this, you can't do this, you can't do this on condos. And you have so many guidelines like, hey, how many people are delinquent? Hey, is the project established? Is it new? Is the developer, how long have they owned it? When did they turn over the HOA? It kind of like, there's so many guidelines for condos that actually like some even branches had condo departments where they only focused on to see if the condo could even get financing. Like, you're bringing on that type of staff for that type of a product, right? That's crazy.
This is nuts. I mean, how do you probably don't have enough time in the day to call all the downtown real estate agents and let them know about this. Like, literally, what are you guys doing? We've got this.
Yeah.
We're ready to roll on this.
Well, that's why, I mean, I want this push to like every single person that specializes in condos, especially downtown. Now, here's even something even bonkers.
No.
It's crazy.
It's
I'm
bonkers.
so excited. All right. So Fannie Mae always had a 10% single entity ownership, meaning that an individual, right, if they own more than 10% of the complex, anybody own more than 10% of the complex, no one could get financing in the condo. It would be called non-warrantable, and they would have to go to an investor. Now they allow up to 20%. That's awesome. One step farther, if the single entity, if the owner that has all the properties, right, is selling one of theirs, which is going to decrease the single entity ownership number, you can go up to 49.9%. Regents in La Jolla, 600 units, 300 of them are owned by one person. No one can get financing. California Coast offers like a 15-year fix. They're in Advantial. I'm signed up with Advantial out of Texas, a small credit union. They offer them. The terms are just not that great. Now, if that investor wants to sell one of his, we can offer just a standard product for that buyer because he is reducing his single entity and he owns less than 49.9% of the complex.
Holy smokes. Now,
Agents should be going crazy for condos. I would literally like pepper every single condo that
who
has
is the
issues.
cat that owns 300 of those units?
He's a gangster.
Like straight up, it's like last name's Capone. Like
Yeah.
that's crazy. So this is opening up a whole lot of opportunity in the condo space then.
Absolutely, yeah. And I think it should because I think that condos have been kind of like, the values have been kind of like suppressed and pushed down and not been able to come up. And single families, everyone always looking for single family. A condo is a great starting place for anyone kind of getting into the market.
What about litigation too? I know that's a big deal in downtown condos, especially because every building goes through the same BS litigation period, and it happens every time because the attorneys are licking their chops, just waiting.
Yeah.
So
Collect that fee.
yeah, well, it's a nice fee. What do you got for that? Is there any changes there, or anything we can do for people who are wanting to buy a condo that's in litigation?
Sorry, I had to do it again. I like that smile.
I wish I had known. We could have both cooperated on that.
All right, so I don't know if you guys saw my one of my last videos. If you guys ever need to like get caught up on some new changes that are happening in the market, go to mortgagegeek.com. I have a bunch of videos on there. They're pretty boring. They're kind of plain Jane, but it pushes off a lot of
That's
cool
a joke.
information.
They're everything but plain Jane.
Yeah. So go there. So Fannie Mae, Freddie Mac, and let's kind of go in that direction right now because that's kind of what we're talking about. They allow for some of the litigation. So you're still totally fine there. Now on the construction defect part of litigation, come to me. There's only a couple of us that still offer a 30-year fix. It's only 0.25% higher than regular agencies. Still on a 30-year fixed for construction defects. So that's never going to stop. But the cool thing about it is like all those attorneys attacked most of the condo complexes downtown, like 2008, 9, 10, 11, 12. Most of them are out of it. I mean, look at Aqua Vista. Like that one was in litigation like the longest, and that one is 60% owner occupied now. And there's 300, like almost 400 units in that complex. Is amazing. It's on Beach Street.
Yeah,
So,
M2I I think is coming out soon, if not already out of litigation.
yeah, correct. Icon's out of it because I'm the one who actually got Icon downtown, the 500-foot building reapproved by VA. So
Very nice.
yeah.
Which is
So
a sick spot, the sky
man,
roof.
that place is
Yeah,
yeah.
it's dope.
I like that. So there's some really cool things happening.
So lots of opportunity for people who want to buy condos. If you're a downtown agent, you're selling condos on a regular basis.
yeah, call me.
More financing options are available. Better terms are available for people because I know in the past it's like, oh, we can get it done, but it's kind of like, you have to go over here or do something wild. Now it's like, hey, this stuff opens up for Fannie.
5-1, 7-1 arm, non-warrantable, like the restrictions. They're just not good. It was not good financing terms.
So a lot of people who may have bought with some of those terms could also refinance maybe with these new rules.
Yeah, absolutely. I got another complex approved through FHA in La Jolla, and there was a single entity ownership. I was the preferred lender for the complex for a very long time, and Fannie Mae just got into a fight with the owner, and so they removed the PERS approval, and so we're having difficulty. But it's Villa La Jolla, so that's also VA, FHA, and they're actually now below the 20% because that rule changed. So anyone in that complex can refinance, can sell now. So those are like those bigger complexes where I run into a lot of issues, and now there's a lot of opportunity. So if I was like a real estate agent, I would be literally peppering so much direct mail to these larger complexes.
Yeah, so just for anyone who lives in a condo or who bought a condo with a non-conventional financing, the opportunity for conventional financing might be there now.
Yeah.
Definitely something worth looking at. If you're selling these types of properties, and you want to get your buyers pre-approved with someone who has more options, because Cornerstone is offering this now ahead of the official release by Fannie Mae, because the president is the Mortgage Geek, and he likes to do stuff like that.
Anything I can do that's like one step ahead, I will always do it.
Always one step ahead. So there's also some non-QM stuff too that's out there.
Yeah, definitely. I mean, we're running some pretty cool programs recently. Everyone's known about these now because more and more people are getting signed up for like the 12-month and 24-month. So I'm like, well, you know, I've been actually kind of working on those since like 2015, so not really that special. Congratulations if you're a little like late to the table. But I now removed it down to a 1-month bank statement. So I have a 1-month bank statement loan. So whatever deposits in on that 1 month, that's what I use for the whole entire file for income. And the actual interest rate's not that bad. Wow. And I can offer a 30-year fixed.
Holy smokes, so that's for people who are self-employed.
Yeah.
Or have tough tax situations where they just have tons of depreciation and whatnot. Or they're self-employed individuals who are not salarying themselves, you know, and they need to be able to prove the income, right? So is it personal bank statements?
Yeah, personal and business bank statements.
You do either one?
We can do either one.
Wow.
Yeah, I came out with a stated program. I just closed my first loan under the new product. It's a true stated for investment. It was a refinance, 65% LTV, stated. The borrower sent me like his mortgage statement and a copy of his driver's license. And everyone's like, we're back to where it was. Folks, we're not, because the collateral piece on these, I'm not doing 100% financing.
I'll do that deal.
65%, everyone's safe. The borrower's not going to walk off 35% equity, and I'm not going to say no when my collateral is at 65% loan to value.
Yeah.
So everyone's like, oh my gosh, there's these new programs coming out. And when I say everyone, like the general public, like I talk to my parents and they're like, Sean, you know, what you're doing right now is, you know, that's going to cause another, you know, bubble. And I'm like, no, it's not. I mean, everything that we're doing is safe. You know, we're proving income, we're proving assets. We still want to know, if you're doing a purchase, like where the funds are coming from. It's not just like, poof, the funds are there. Like we're actually sourcing where it comes from. So, and we're just—
You actually need funds.
Yeah, we're just smarter today.
Yes, that's always made sense to me. I've never understood why someone who has 25% down, let's say, would not get approved, regardless.
Correct.
Like you put 25% down, like I'll loan that money.
It's like if you're saying that you're responsible for the payment, fine, because realistically, I'm going to get 100% of my money back if you foreclose.
Yeah, I'll definitely get it
And
back.
there's probably going to be a little bit extra going back to the guy that owned the property through the foreclosure anyway.
Possibly.
Yeah.
But you're super safe there.
I agree.
That has always made sense to me. But now it seems like we're starting to get back to make sense lending. And instead of people looking for, or you know, the industry looking for people who don't qualify to make them qualified, they're looking for people who are actually good risks that maybe don't fit into the box.
Correct.
That sounds like what it is.
I'm doing another video that's coming out about non-QM, so watch out. It should be launched in like 2.5. We're trying to get it down to like 2 weeks, but let's be realistic. I run a little late sometimes, so like 2.5 weeks.
2.5 weeks. Make sure you like The Mortgage Geek on Facebook, or go to mortgagegeek.com. Check out all those super plain Jane, not interesting videos that are on that website.
Oh, and real quick, I just have to plug this. Please call me, email me. I now have a doctor program that I'm going head-to-head with Bank of America, BBVA, and Union Bank. Here I come.
Is there a doctor in the house? Calling all doctors. Doctor! Call the Mortgage
You
Geek.
can't take my deals anymore.
MortgageGeek.com for the doctors. Be there, be square.